Hello, West Pacific Market Analytics, and it's Glenn here with your West Pacific week. I hope you all had a great week. Just again, more of the same in the markets. We've got the retrace here, is what I like to call the wave B. Looks complete. We did again over 83% on that retrace. And again, on these B wave retraces, you can get 78, typical 78% retraces, and they can go as high as almost near the 100% level, almost retracing the entire move. But we're not going to see that. On the pattern model I'm going to show you, it's actually the completion of a wave 2 top. The pattern model has, is set up much different than the overall market model. And we're going to look at both of those, so I'll show them to you. Just want to get into a few of the technical signals here, not get too complex here as we finish off the week. We've got a lot ongoing under the surface here. A lot of things look like they're lining up and coming into place. So let's not, without a waste of time here, let's just get right into it. And here's your disclaimer. Again, West Pacific Market Analytics. Again, please do your homework, your own research. And this is for entertainment purposes only. Thanks for tuning in. And again, if you want to get a hold of me, please get a hold of me at destinytrading@gmail.com for both our Discord memberships. And if you'd like to get me on board on some sort of speaking engagement, I'd be happy to do that. So let's just jump over here and let's get into some of these data models I put up here for the members to look at. And we got quite a bit I'd like to go over here. So let's just run up here and let's find where we're at here today. And we'll take a quick look at these. So hold on here. There's that one. I want to start off, actually, there's one just above here I wanted to start off with. Hang in there. Actually, I pulled it down. So let's just get right into what I put up. Let's start right here. Okay, here's a signal model. I call this the dot plot. So you can see right here, we got the top here in the signal right here, and it has turned over, right? Now, what's interesting in this particular signal is you notice we got the signal top here back in July of 2023, and the first signal we had here in October of 2021. And so we've only had 3 signals, and you notice now we have this third top here in May, and that's the old sell in May and go away. Right there we've got the top. Now what's interesting is you notice here on our top back in February we didn't get the signal. We came down, we came back up, and now on the B wave high we have the signal coming in and topping out. So to start with, we've now got the 3 clean signals right across the top. We'll see what it wants to do. Now you notice on this one it pretty much timed right to the top of the move. Here we still had a little bit of grind sideways before it started to head lower. So we're going to have to see how it sets up this time from a time perspective. But it's a lot different around this time. And let's just talk at looking here at the pattern top. Now as I mentioned, since here is the top in the S&P right here, this became a wave A and then a wave B retrace, okay? Again, there's your left shoulder. Here's your right shoulder. Very clean looking head and shoulders pattern complete. You obviously, when you first come down off of the very top of a move, you get the bounce back up to form the right shoulder. I was expecting the bounce up. It did go a bit. I was expecting a more up in here, but it did push a little bit higher. Was thinking 50%, but it went to 83.5% and is now completed. And that's why we had a lot of red activity this week. Now, in the pattern top model, our top was actually back here. So in other words, we've got the same setup. You notice the head here all the way back in July, and then the left shoulder over here, and this very giant right shoulder. And then you notice we had our A wave down, our B wave back up, and now we're in the C wave. So the C wave was a wave 1 down, and now we've had a wave 2 up, and now we're heading into the wave 3 down. Now my projections for this wave 3 down, and it looks like it's going to take us out here into June. So I'm expecting the wave down to June to take us somewhere around this 45.88 level for the S&P. And then I'm expecting another bounce because it's the C wave will be the same thing. And I think on the way down to this wave 3, remember we're going to have a lot of choppy moves here. So typically a wave 3 is 5 waves. So this signal here in blue is going to be choppy. And then I would expect here this more of an ABC type move. So I'd expect on the way down here, part way down, we're going to get a pretty good bounce. And then we'll come down, we'll get a bounce, then we'll come down here to complete the wave C. So this will be a wave This will be a wave, excuse me, 1, 2, 3. This will be coming down. So this will be an A, B, C type move here for this wave 3. And the final low will be down here. So after we're going to get this bounce, we'll look at that once we get there here in late June, mid to late June. Then we'll have another bounce back up, and I'll project that. I've got other projections for this as well. And then we'll have our final washout. The washout will probably take place somewhere out in September, October. And that'll take us down here to around 3,900. So that's what we're projecting. We're going to see how that runs. Now, I'm talking about this just giant right side to the model. So you can see this whole head pattern back here. You notice over here we got this very nice head pattern, triple top here on the channel. And this whole side now is just the right side of the model. So, I mean, this is a right side from this topping pattern all the way out here in 2020-21. And now we're completing this right side shoulder here in this particular, this is a bond-based model. And I'll tell you right now, you've got to be watching the bond market, because I really think a lot of what's ongoing under the surface has to do with the bond market. There is absolutely, as I went into that video showing how much of the debt is coming to maturity and rolling over in the next few years. And not to mention, we look at the Treasury notes, Japan is just at a disaster right now, losing control of the interest rates. And I've always spoken about on the 10-year in Japan, if it ever got above 1%, Japan is basically using all their revenue just to pay the bankers the debt on their, the interest on their debt. So there's some serious, serious issues underlying this market. Don't be fooled here. So you can see this idea of the right side. This big right side here is now completed in the bond market, and that is just not a pretty situation for the markets at all. Let's just keep flashing through some of these models here. Here's a really key indicator I'm looking at. You notice the signal's still open here, and you notice how this red is just grinding sideways up here. That's what we're watching here. And notice on this initial sell-off, we got a little bit of a closure here on the gate, and red started to drop, but then look, the market rallied right back up. Now I want to see this red start to fade lower here in the coming few months. So we're going to be watching that. Now we can still sell off without it, but we really would like to see it participate in the ongoing. Here's a model of that. I was talking to my members about exactly what this is, but you can see that this has been ongoing since all the way back here in April, May of 2024. And just look at it, just grinding sideways here, right? And it's actually even got a little bit of, look, this has held that high right here so far. So this looks like a real right shoulder on this particular indicator as well. So we're going to be watching that. There's a lot of these where we're seeing this kind of red, this kind of grindy sideways. And here it is right here. Look at this. There's only one time the signal closed here. It was able to break below this channel here. And you notice that it's just been rising all the way since 2009, just after the low back here. You see, just rising, rising, rising right up. So if we get some of these longer term indicators decide to bust below and start breaking down, that is going to say a lot about this entire rally since the 2009 low. So there's a lot we're watching at right there. Now you can notice in this particular model, I think what I was telling my members here, yeah, this split signal idea here, you notice how we came down and we rallied back up, and then we're now back up here again at the top of the signal. So another signal's topped out right here, and we're seeing signal top outs all over the place. Now I want to show you this particular signal here. You notice when the blue breaks down, we get this weakness in the market. You need to see here, blue breaking down very aggressively in 2020, blue breaking right here in the 2022 move, and we've now got blue rolling over here, and you notice the gray trend just starting to break down here as of this week. See that? This week we've got the first break in trend. And last time we had a break in trend was back here in this minor correction. So we want to watch this because I'll show you why. When this blue indicator breaks down, it wants to get pretty interesting. Take a look at this. I pushed this all the way back here to the year 2001. And you can see here in the 2000 correction, we had blue breaking down here and breaking down here into these moves. And then you can see in the 2007 correction, again, blue breaking down, trend breaking down, and the market selling off. Look at this sell-off right here in 2011, same thing. This sell-off right here in 2015, you see it breaking. Here's our sell-offs here, our sell-offs here. You see the blue breaking, blue breaking, blue breaking, again blue breaking, and now we're setting up here with a break developing. So we're going to be watching this real closely. And here's how it looks when we take that idea close up. You notice off the top here now, blue has broken. And right here, this is a daily model. In the last 3 days, we had this signal and the trend breaking lower in the last 3 days. This is speaking of something very bad underlying the market. So we're going to have to look at how this sets up for next week. I mean, that is a really interesting technical look right there. Let's look at the 3 key internals. We haven't done that in a little while, and I think it's important to look at them. You can see here on the dot curve, you notice here our blue dot curve that I talked about. The dot curve is the directional of the circulation of the trend momentum, okay? And you can see we topped out on that at 2021, and then once that indicator, this red indicator came down, you can see the market corrected down with it. And now we've got it topped out again here, same level at the dot curve. We've got the signal top in like we had the first signal top and the second signal top. So notice we've got a signal top in turn at the dot curve on the key internal 1 and the key internal 2. We've got the same setup. Notice topping here, signal turn. And on the third key internal, same idea, except here it broke out and above. You notice here it stopped right on the dot curve in the 2020 correction. You notice it was a huge top out here, of course, out of the Fed printing, and then eventually broke down. And now we've got a third top out, or actually only a second top out on the signal in place on the third key internal for the S&P. Now, when I talk about 3 different key internals, I'm talking about different measures, or what I consider to be the most important internal type indicators, technical indicators within the market. There's many, many different technical indicators. When you look at the overall picture, there's dozens and dozens and dozens of these, and out of this extremely large group of pretty much, I monitor almost every technical that exists, I consider these to be the 3 most important, and all 3 of them have now fired off. In addition, we have the SPX signal topped out and fired off. You notice here last time was in the 2022 top, right here, not 2022, 2023, when we had that minor correction, and the 2022 top was back here. We had this with a second high here. You notice one high here, one high here, and then this minor correction in July to November of 2023. And since that low, you notice we had one signal low at the major market low here, and then a minor low here at the 4100, and now the signal's topped out. I mean, everywhere, folks, is screaming, we are done at the top. Now, let's take a look at Bitcoin. I think Bitcoin is done. It's now headed to 93,470. That will come here to test the gate. But you notice how deep the V channel is. This puts the V channel here. If we start selling off into June, this will roll over. That takes us down to 76,000 just to enter V. And then we've got a lower price band around 49,000, 50,000 below. So I love the look at this. We got a perfection triple hit on this high, as good as it gets. It hit to the T, not on just the real body, but on the candlestick of the day. I mean, that is just amazing. And you notice it came up, formed an A, formed a B, formed a C, formed a D, formed an E, and now we're ready to break down in this massive megaphone looking pattern. This is not at all speaking of any kind of higher high in Bitcoin. So I really, really like what I'm seeing there. So we're going to see how that sets up and how that develops. Because I definitely think we need to see, obviously, Bitcoin pull back if we're seeing this overall top in the market. Now, this is a bond signal that I'm watching. You notice we've now got the top here in this bond signal. This is a hugely long-term top on the bond signal. I want to see how this develops. We've got the bond signal in the bigger picture, and on the daily, we've got this head and shoulders formation in the bond signal. You notice the top here, left shoulder, right shoulder. Okay, so we got a very, very nice looking topping formation in the bond signal. Now, this is an important bond signal because, you know, the Fed can, with their mandate, and I talked about that and I posted that back in the bond report. I'll have to bring that up again. they put out a mandate that allows them to utilize and buy the bond market to support the stock market. But more so, they just want to protect the bond market because obviously there's so much debt underlying this entire beast that they want to be sure they can try and protect it. But I don't think, they've already got such a huge balance sheet. I don't think necessarily they need to tame inflation. It'll be interesting to see if they can control it. So I don't think they have as much power anymore under the hood as what they once did, simply because their balance sheets become so large and we have so much debt within the overall structure of the global economy. So again, we got this really nice looking head and shoulder there on the bond model. Now I wanted to show you this newer model also around the bonds that came out of our recent bond report I put out. And this is really interesting because you notice when you get market lows, you get these big spikes up in the bond indicator. This is a particular indicator that I put together for our membership. And you can see right at the low here in 2002, you had this big spike up here. You can see at the low in 2008, just before the low in 2009, a big spike up and then it turned. And then you can see the same thing in 2020, a big spike up and then it turns. So you can see these three tops here, right? 1, 2, and 3 in the signal. Now the signal has come all the way back down. It's reloaded below, and we're going to be watching. You notice it's come to a razor focus here, and we're going to be watching this signal out into the future here. So this is incredible because it's really done a great job of calling the major lows in some of these bigger rallies in the market. And you notice even here, when we had this spike up, we had the first low in the market, then we had one more push lower, but not much. And then, of course, once the signal started to go back down, we headed up. So as long as this is moving down in the bond market, the stock market will move higher. So we're going to be watching that. Talk to my members about that. I think it's really interesting. Now let's finish off with a couple of the option-based models because I've been looking at that. It's always we are watching the put call and the option models. We're watching the tail risk models. I mean, there's so much we're watching out there. It's interesting. I can't put everything into every one of these reports, but I try to mix it up a little bit. You can see here on the Indu option chain, look at how it topped out here on this move and then it just collapsed right down it. So what we're measuring here is the red indicator with the market in blue, and then notice this choppy looking rally back up here. But look what we have below here. We've got no rebuild here in the trend. It tried, but it's rolled back over. No rebuild in the velocity. This is ugly looking, this whole rally back up. This collapse out into June could be extremely aggressive according to the option model. And you can see that here the move could get aggressive because here even on the S&P option chain model, we've got the same look. Look at absolutely no change in the velocity sell-off here. Velocity in the drain is absolutely interesting here. Look at it drain. And we had this thing pop out here with the market and look at it bending back over here. So we're going to be watching that really, really closely here on the option chain and see how that works out. Working out of the home here tonight. Sorry about the barking dog. Yeah, don't we love it? Everybody's got a neighbor barking dog out there. It seems to be relentless. Anyhow, have yourself a great weekend. Thanks for tuning in. I've got some other, I haven't been getting as many updates on YouTube out of late because I've just been really, really busy working a lot of things with our Discord membership. And we've been looking and sharing a lot of things over there on our chat platform, which is right here. You can see I'll go over to the chat here. And we come on here every day and we're sharing a lot of information and talking about a lot of things. So I've been pretty busy over there. I'll try to get more out on the YouTube channel. It'll become more current as we get out into June. But there really just hasn't been too much to talk about, and that's also part of the reason I haven't really been posting a ton of videos over there. But we will keep the weekly going, we'll keep the month end going, and I'll start getting back at you once things get exciting with more daily updates. Again, get a hold of me at destinytrading@gmail.com to join the Discord site. A full year membership will cost you about the amount you'll make in one trade, and I can tell you it is well worth the capital to join. There's nothing like it out there with what lies ahead. And absolutely, we are going to nail every move forward in this market. Thanks for tuning in. Glenn out.